Well, hello everybody. Welcome to the Middle Class Investor. This is Seth Martin. Well, there's a saying in the market, and it goes like this: the market can remain irrational much longer than you can remain solvent. Which means if you're on the wrong side of the market, it will drain you of your resources, even if you're right. And of course, I'm not claiming to be right. I don't know if I'm right or not. There's no way to know. But the market is very, very, very overbought and very bullish. There's a real high degree of bullish sentiment, which I suppose could be legitimate, but I don't know. It's just hard to see it. But sometimes that's the way it is. One thing I want to point out today is just that we're at the bottom of this large channel that we broke. So a lot of times once the way support and resistance works, we've talked about this before, but once you break an area of support, which was broken here, but this could be classified as just leaning against the support, but then we got a clear break. I mean, these are clear breaks as well, but a sell-off down to here was a clear break. And then once you break support, this being support right here, okay? Once you break support, it becomes resistance. So here we are, potentially at resistance. Very, very overbought. Tremendous amount of bullish sentiment. I think I talked to you a couple weeks ago about how that works. So if there's $100 in a particular, the easiest way to think about it is if there's $100 on a particular position and there's 90% bulls, the amount of money that they're betting is equal. But if there's 90% bulls, that means the bears have 10 times more money. Or is that right? 10 times? Well, their 10% bearishness has an equal amount of money as the 90% bullishness. So what tends to happen is when you get 90% of the people on one side of a trade, it's usually the wrong side and the market, turns and starts to go the other way. That has not happened yet, obviously. But we could see some selling this week as we are at resistance. And we're also, there's a small gap here at 29, 21, 36, very small gap that I've marked on the chart. I mean, it's possible that we go up and close the gap. It's also possible to go up and make new highs at this point. I don't know. The bond market definitely has rolled over, I think. I mean, I think there's no real disputing that. If you look at the 30-year Treasury and the 10-year Treasury, I think this is finally complete, this sell-off here, whatever this pattern is. And we'll probably start moving higher here. A good way to do that, we've used this before, but I'll tell you what, let's do a trend line here. Once we break through this trend line, I think we could be maybe off to the races. But we've had a substantial pullback. In fact, let's just measure it from the low here. This is the low to the high. Notice the pullback we've had 61.8% and a little bit more, right? Almost to the 78%. We've gotten some deep pullbacks in these markets, which makes it feel like that maybe we're wrong about the trend, and we could be wrong about the trend. Time will tell. We'll see. But this is a great, if you're going to be long yields or short bonds, you've got a very important low. Okay, this is like an all-time low. You got to move off the low and a pullback to a higher low where the market starts to move out. This is a great area to either be short bonds or long yields, depending on how you're playing that. Let's look at the 13-week Treasury. We've been waiting to break out of this formation here. Haven't really done it. You can see it goes back a long way. It goes all the way back to, well, really we entered it in November, and we've been in it since then. So many months. And once it breaks out of this formation, even if the Fed's talking about not raising rates anymore, they will continue to raise rates. And we'll just go back. Let me put a line here so that I can remember that's when I said that. And if we have to, we'll go back and look at. We'll go back and listen to. Let me change this to 5-year. We'll go back and listen to old episodes to show it. So if this breaks out and starts climbing higher, the Fed will be raising rates. The market's going to be very upset. But the Fed follows the market. It doesn't go the other way around. The Fed does not lead the market. 8 or 10 or 12 people, whatever it is, that sit on that Fed board do not whip the rest of the market around. All right, let's look at volatility. Volatility is still very low. I mean, historically low. 12.82 is super low. You can see though that there's not a lot of recent volatility numbers, ticks and stuff below this level. So I suspect we'll see a pickup in volatility here soon. Let's look at the Dow Industrials. Same thing. If this is a wave 2 retrade. Now this looks very ABC-ish to me, which means we could get a new high. We could get a slight new high. Or this could be the ABC, right? ABC. But this looks very ABC. ABC. I don't know. It's all very choppy looking and sideways. And generally, when you have a sideways pattern, you just want to wait and see when it breaks out. Of course, we're talking about waiting over a year, which is that's very frustrating. All right, let's look at Germany and Japan, United Kingdom. You can see they're kind of in this downtrend channel, but looks like showing some strength here at the bottom. These, though, just to caution you, these could be counter trend rallies. I mean, this is a very strong move down, and you got to respect that. There's nothing wrong with trading the counter trend just in case, but you have to be aware that you might be trading a counter trend rally. All right. Is there anything else we want to look at there? We looked at the Treasury yield. Let's go over to the toss charts and look at what are we on here? We're on the US dollar JPY. Guess we can look at that. The US dollar JPY. It does look like the US dollar wants to go a little higher. And potentially the US dollar JPY could go higher. I mean, this could be the predominant move here, and then we've got kind of an ABC here. The one I look at most often is the Euro US dollar. Because these are just the two largest economies. Well, China is too, but two largest Western economies. How about we just say that? Leave it at that. So we got this downtrend line, and we could very well come back a little lower to this downtrend line. Especially if the US dollar continues to rise. If the US dollar continues to rise, then we could see this come all the way back, actually to a lower low back in here around 102. We just have to kind of wait and see. I don't really see a good place to enter many of these currencies right now, so I'm just kind of sitting on my hands. The GBP US dollar, we got Brexit stuff, and that may be part of the challenge. It's just Brexit. GBP US dollar. So I've got on here a target. You know, I'm not actually trading this, but it looks like to me that it could run its way up here. Oh, excuse me. You got a little sleepy feeling there, but essentially, as long as this Brexit stuff is going, it's going to impact these currencies. So I'm kind of just sitting on my hands, waiting for some more clarity. Let's look at oil. Oil, you know, I think it has a lot of potential to go higher. I don't know. I thought maybe oil might be in some sort of sideways pattern, but I thought we would have turned sooner than this. So I don't really feel comfortable about where oil is right now. I think if you're chasing it here, that's probably maybe a little risky. You might want to see it pull back maybe into here, mid 50s area, and then trade it on up into the resistance here with the triangle, if in fact we have a triangle. Gold, you know, gold and silver are going to be pulling back here for a little while, I think. I think they are in a triangle. You can kind of see it here. A, B, C, I don't know, A, B, C, D, E, maybe, where this is E. So look for E to pull back in here, and then look for C to finish out around 1460. Maybe a little higher, maybe as high as this 1550 area. We'll just have to see, but you know, where A, if this is A, where A would equal, where C would equal A, is right here at the 100% area around 1460. But you could get a little bit of an extended C here around the 1450 area. We didn't talk about silver, but silver is the same. I would say its pattern looks different, but the result is probably going to be the same. And if you're going to trade one or the other, I think silver is a better trade, because I think silver is going to end up around here, you know, with like a 60 or 70% gain over the next year or so. So I think my preference would be to trade silver. And plus, let's look at what you have on silver. You've got a low here, an important low. Like if we went to a monthly chart, let's just go to a monthly chart real quick. Well, actually, this is a higher low. So you got an important low here. So we had this long trend down into this low, and then we had a rally and a pullback to a higher low. So this low right here is higher than this low back here. So let's go back to weekly. So because of that, because it pulled back to a higher low, that means that it pulled back to a level of support. So as long as it's making higher lows, let's zoom in. So it pulled back to a higher low, it rallied, it's pulled back. So far it's at a higher low. And what you want to do is you just want to enter somewhere in here, probably right here, maybe with a stop just below this low. Now the other thing you could do, let's just talk about this real quick since we're talking about investing potentially in silver, is you could wait till you got a close above this low. So wait till you this is an important low right here. So wait till you get a close above this low. So wait till this candle looks like this, and then you can enter. Now be aware that it could pull back some, right? So let's say you enter here right at the close, and the next bar, you know, the next thing comes down and makes a bar, and maybe even runs lower, like right here, right? Maybe it runs all the way back to here, and then, you know, the next candle looks like this and this, and maybe you get a big one in here, and get a little pullback, and then maybe another big one like this, maybe one of these really big ones here, like so. So, you know, whatever your rules are, I'm just pointing out that this is an important low right here, and whatever your rules are for entry, follow those rules. But silver looks like a good play here, and we're also kind of breaking the trend line here over the next couple of weeks. We're going to break that trend line if it continues to go up. Okay. All right. What else? That's really about it this week, people. I mean, it's just for me, it's a very frustrating market because the bullishness is very, very high, which I know can't last forever, but it can last a good while. And just the timing of where to enter and stuff is always the frustrating part, because you can be right, but your timing can be off, sometimes months, and that's a frustrating place to spend time in the market, because you're generally losing money, or you're having some sort of drawdown in your account, and that's never a very fun thing. So let's just close up with a look at the S&P 500 again, and see, we're talking about we're coming to the underside of this channel right here, which goes all the way back to 2016, the 2016 lows. So it's an important channel. To me, this looks very this move up looks very legitimate. Kind of a 1 ABC 2 3 breaking out of the channel. That's very common. 4 back to the bottom side of the channel, and then 5 not breaking out of the channel. So to me, it looks like the 5-wave move is complete. It wouldn't make a whole lot of sense if this was an ABC, because this is very small compared to that. So that's an important, principle when you're looking at these wave counts, is the relative size of this one versus if this was all 4 here. If this was all 4, I don't know if everybody knows what I'm talking about, but I'm talking about this being 3 all the way up to here, and then this whole thing being 4, and then now we're in 5. I mean, it's possible, but this would be a very large 4. So 4 ABC. And it doesn't matter that the B is higher than that. It doesn't really matter. It's still a legitimate deal. But this thing lasted from, let's see what was the date here. January 2018 to, basically the whole year of 2018. Whereas 2 only lasted from, say, let's just go to here. Let's just say it started here, but I don't know which one. January of 2016 to April of 2016. So we're only talking about 4 months here. So how could this 4 be a whole year when 2 was only 4 months? So I think it's more likely that this pattern right here is 4. This pattern right here, this ABC. So A, B, C. Okay, that's 4, and then this is 5. So that's kind of in fact, if you look at the time, this was January 2018 to right here, let's say April 2018. That's 4 months. And what was wave 2? 4 months. So to me, this is likely 4. This is likely 5, and this is likely the first move down. So we'll see. We may have to move our 2 over to here, and move our 1 down here, and then maybe get rid of the ABC. But we'll see. We'll see. We'll just have to sit and pay attention and keep an eye on what's going to go on. But again, just as a reminder, there's a gap. You can't see it here because we're on a weekly chart, but on a daily chart, there's a gap, very small gap here at 29.21, and we're just below that. A lot of times those gaps are like magnets. What we could have, just an example, what could happen is we could open next week and actually run up to close the gap, but then turn around and sell off and get a candle that looks like that. And if we do, that's fairly negative. For it to be guaranteed negative, we'd have to see another candle like that. But I mean, it's possible that we get something like this and it runs up to the gap, closes the gap, and turns around and starts coming back. We'll see. It's better not to guess with money, but it's fun to do here, just to talk about. Mainly the reason I guess at these different scenarios is so that you can be thinking about what you're going to do if the market does that. If the market does this, what are you going to do? If the market does this, what are you going to do? So that's the way you got to handle your money. You got to have a plan before it actually does what it does. Because if you wait until it does something, then what you'll do is you'll rationalize that everything's okay, and you'll just wait, and and it just doesn't work. It doesn't work. You'll end up losing all your money doing that. Okay. All right, everybody. Thanks a lot for coming in this week. Really appreciate it. Hope to see you next week. This is Middle Class Investor Seth Martin. Take care. Bye-bye.